Big news is U.S. Presidential and congressional elections, and uh, the whole world is looking at what is going to happen in U.S. after these elections. Now the results are out. Uh, Former President Donald Trump is going to be the next president of the United States. For us who are there in the markets, are concerned about what is going to happen to the U.S. dollar and what repercussions it will have on the global economy and currency markets, as well as the money markets. First of all, we all admit that the US dollar is a dominant currency. So whatever happens to the US dollar will have a positive or negative effect on various currencies. Now, we have seen today the dollar has gone up quite substantially higher, and bond yields have been already moving up from around 3.6%. The 10-year bond yield has gone up from 3.6% to currently, I think it is around 4.45%. So nearly 85 basis point it has gone up. Why have these things have happened? Mainly because of Trump's trade policies and fiscal policies, as he has said during this election campaign. What Trump has done was said was he's going to impose huge tariffs on imported goods. That will be, of course, imported tariff on imported goods is kind of a sales tax on the American population. So it means the prices of commodities can go higher, imported commodities can go higher, and inflation will pick up. Apart from that, Trump's other policies are not very clear. So people think that there will be fiscal policies may be loose and inflation may go higher. That has pushed the bond yields higher in US, and of course the dollar index has also gone up. Now coming to the tariffs, this tariff problem has been there for quite a long time between US. In the 90s, it was there between the US and the Japan. And the last 10 years, there's been between US and China mostly. There have been tariffs on Chinese goods ever since 2018, when Trump imposed tariff on Chinese goods. Some of the goods had actually attracted 100% tariffs, and now Trump says that for all imported items from whichever country it is, it will be 10% tariff, 20% tariff, and for Chinese goods, whatever it is, he says it will be 60% tariff. And for imports from Mexico, it will be 200% tariff. So the American population will have to pay if they want to import from these countries, almost now. So that has caused the fear that the fiscal, the fiscal policies will go loose, and Federal Reserve will not be able to cut interest rates as they had planned. People were expecting at least 3 interest rates cut this time, and further interest rates cut may probably happen at the beginning of the next year, which is unlikely if Trump has his own way. So this is one point. And secondly, if you look at the long term, last 2023, the fiscal deficit was so high, it was around $1.8 trillion for the US. Now people say Trump claims that fiscal deficit will come down because of this tariff revenue will go up. But what economists say is this, because of the higher prices, the consumer spending will be lower. See, if you are going to import certain things at a very high cost, the consumer will not be able to pay and the spending will go down. It means that the revenue that President Trump is planning may not really happen. So the fiscal deficit will only be higher. So this is another downside. And the other countries will also retaliate if Trump is going to go ahead with his plans. This same thing happened with India also in the year 2019. when Harley Davidson problem came up, they imposed some tariff on some of our goods, and India also retaliated by putting some tariff. I think it was a steel item which Trump imposed on us, and India retaliated by doing a countervailing tariff. So Trump is also targeting almost all the blocs, European bloc, China, and other Asian countries also. So this is a major downside of Trump's policies. So initially, what will be the effect on the currencies? Naturally, dollar will go up, dollar index will go up, maybe 105, already 105, maybe 106, 107. It may go up again. And bond yields might probably settle down around 4.5% or 4.6%. And emerging market currencies will suffer because higher borrowing costs in US will discourage investment in emerging markets and emerging economies as other direct investments. Coming to India, uh, India has got a balanced thing in the sense that we have our Prime Minister has got a very good relationship with President Trump. Personal rapport he has got, even though at times President Trump has actually criticized India's tax policies. One. So the personal relationship probably will benefit India. And Trump's China plus one policy, which actually Trump initiated long back, will also benefit India. Mainly, what are all the products actually Trump will be imposing tariff on will be mainly pharmaceutical products, and from our side, from China, textile products will also face tariff. Then our textile industries will get benefit out of that because we have a huge textile market. Trump has also promised to cut energy bills by 50% in the next 1 year. I have a doubt whether it is possible because the energy prices are always linked to the crude oil prices. So market forces will work. Definitely, it will not be uh, possible for Trump to cut drastically the energy prices. So coming to Indian markets, today the Indian markets have reacted positively, but especially the equity markets have reacted positively. And monetary policy wise, if US inflation goes higher, naturally it will have a spillover effect on various other economies, and finally it will affect our economy also. And so this could create a kind of a stalemate where RBI will not be able to cut interest rates. And Trump also had promised about the food prices that he will stop importing food agriculture products from outside, other nations, which will have a negative effect on food prices in US. And of course, the other countries will also retaliate. So I doubt whether seriously Trump will have a free hand on this count. Suppose he is able to do something, then food prices will also go up globally. So this is another major issue now. So as far as the RBI policy is concerned, most other emerging markets will not rush in to cut interest rates immediately. They will wait for the US economy to settle down the next 4 to 6 months. Then they will see whether there is room for cutting interest rates. So rupee will also, even though rupee will face some pressure because of the interest rate differentials, rupee will not fall too much. I mean, maybe it can go to 84 and a half or 85, but there will not be a steep decline for the rupee. See, as long as the stock markets are looking good and our economy is able to perform well, I think the FIIs will have to one day come back to India. But they will again come back, I'm sure about it. And rupee will probably stabilize around this 84 and a half level. So This is how we are looking at the market currently. So once Trump is back and the Senate, already the Republicans are majority, the Congress, we will have to see whether Republicans are in a position to get majority. If both the houses they get majority, then it will be Trump will have his own say. But if Trump is not in a position to get Republicans are not in a position to get a majority in Congress, then it will be balanced. I mean, it will be difficult for Trump to pass all the tariffs immediately. So dollar index might probably remain stable around 104, 105 levels. So we'll have to wait and see what happens once he takes power in the month of January. Then we will know what are all the tariffs and other things he's going to impose. I'm sure whatever he has promised during the election, he will not be able to do it 100% because opposition will be there from almost all the countries. So he will not be able to do it 100%. If he says 60% tariff, he may probably do 25% or 30%. This is what I expect. So with this, we will see coming and about the GDP growth of US. Trump expects GDP growth of US to go up, but if fiscal deficit is going to go up and consumer spending is going to go down, then the GDP growth will be lower than expected. It may probably be around between it will be lower by about 0.5% to 1.2%. The GDP growth will be lower. So yeah, when there are some positives, there will be negative also. So we'll have to wait and see. And for the time being, for the benefit of our clients, I would say, I mean, if there is any pullback on the dollar rupee towards 84.10 level or something like that, hedge your imports. And for exports, gradually you can hedge your gradually your receivables as per your plans.